So you're thinking about getting into the real estate market. You've heard right now is an amazing time to be buying, but you don't know, should I buy something that I'm going to live in, or should I be an investor and try to make some money? That's what we're here to talk about today. I'm Boanka with the Compass team.
And it's Safraz with the Compass team.
And we're going to be diving deep in helping you understand whether you should be living in the place that you're buying or whether you should be using it as an investment in the place that you're buying. There's no right answer. There's pros and cons to both of them, and we're going to be talking about each of them, but we're also going to be saying real life examples. As you guys already know, if you've seen us before, me and Safraz, we are investor focused and we are investors first. And even when we were buying our first properties, the first thing that we did was buy an investment property before we bought our own property to live in. So let's bring it to you, Safraz. Tell us a little bit about the property that you bought as an investment and why you bought it as an investment.
So my first investment ever was a pre-construction condo at Don Mills in Eglinton. We talk about pre-con a lot, so it had an easier down payment structure for me to get closer to the 20% down. And I had no intentions of living in there, to be honest. I lived in it. I was young, so I wanted to have a little freedom and some space and have some fun. Probably had it for about a month or two myself, but for me it was.
Quick question. So you're saying you bought it to live in, or you bought it as an investment?
No, I bought it as an investment, specifically for an investment, because I knew at that age I didn't need to go out and spend, the mortgage, all of the holding costs of that, just for my asset to grow. It was more so, let me put the down payment, let me break even or cash flow, and let the investment itself grow.
Okay, what year was this?
I bought the pre-construction in 2009 and it closed in 2012.
Okay, so now it's not 2009, it's not 2012.
Yeah, absolutely, of course.
We're in a much different market. We do want to tell you about kind of how things have gone, but we want to be more relatable and we want to talk about in a market like we're in today.
Yeah.
Okay, so were you able to have it cash flow?
Yeah, surprisingly, even then it wasn't crazy cash flow, but I was cash flowing about $250 a month.
Okay. So now let's say what price point should we be talking about today?
I think, as an investor, you don't want to get in too crazy. Of course you can buy a $1 million, $2 million, $5 million multiplex, but I think especially if we're talking for investors, it's best to keep your investments cash flowing yet not overwhelming financially, right? Having to put your down payment on $1 million is a lot different. I think we can focus easily, especially what we're seeing these days and what we've been able to do between 500 to 600 is a really good range.
Okay, let's just go off of 600,000.
Yeah.
Now, if we're talking about 600,000, what's your down payment going to be on 600,000?
So if you're looking, depending on the down payment, of course, speak to a investor-focused mortgage broker, right? You're looking, I would say, between 30,000 all the way up to 120,000 if you're putting 20%. Different people are in different situations. That's why we give you that range. Some people are able and want to put the 20%. So then 600K, it's 120,000 down, right? Some people want to get away with a little over 6 to 7% down.
Yeah.
That's where we get that other number from.
And either way, what we're talking about is we're gonna compare if you're buying something for yourself at 600 or if you're buying an investment at 600. So the numbers are always going to be the same in terms of what you're paying towards the mortgage, what your down payment is going to be, what your maintenance fee is going to be, what your utilities are going to be. And most likely speaking, if you're buying something for 600,000 in the GTA, there's a very high probability it's going to be a condo.
Of course.
Yeah, so that's where we're going to be focusing today. Keep in mind everything that we do say. If you do want to go farther out, you are going to be able to get something that's freehold. But just for the sake of things and being GTA agents, we're going to be talking about primarily condos. $600,000 condo with $500 maintenance fee.
I would say $500 maintenance fee.
With a $500 maintenance fee.
Okay.
So let's talk about what does your monthly costs look like for that?
So monthly costs, of course, we have the mortgage, maintenance fee if it's a condo, property tax, utilities, condo insurance. I would say ballpark you're looking at on an average side about 3,500. If you're going super high side, it'll be 3,800 at the most.
Okay, so let's say 3,500 is the number that we're looking at monthly. Now, for majority of condos downtown, for something this price at this price point, you're looking around $2,500 a month to rent that same place. Okay, so if you are a renter, you'd be paying $2,500,
Yep.
and if you're an owner, you're gonna be paying $3,500.
Yeah. So when I was for a long time, specifically maybe from the culture I'm from, it was always looked at rent is throwing your money away, right? It's always like you're renting. Your brother tells you, your family members, like, why are you renting? Why don't you just go buy? Right? But it's the culture I come from too, right? Like in the brown culture, they always say, don't go rent, go buy it, save some more, live with the parents, and buy and move in, but never rent. Like it's even hard to convince someone to rent, It's because they're so focused on throwing away. And I had that mentality for a very long time until I saw like the truth, the truth of the matter, which is why we're here talking about it, because I think it's very important. Because you talk to anybody, like, why don't you just buy? It's like, yeah. Are you going to lend me $120,000 and $3,500 a month? Why don't I just go, rent for $25,000?
Much easier to get into. So something I always tell people as well is if $2,500, this property is $2,500. No matter what, every single month you have to pay $2,500 to have a roof over your head.
Of course.
Now, if you're thinking about buying, minus the down payment and all of that, you're looking at $3,500. So you're investing $1,000 every single month into the real estate market. Now, the real estate market on average goes up 6.7% every year, but there's other investments that you can do as well. That's not really what we're here to dive into today, but these are just good numbers for you to know to kind of set the stage for everything that we're going to talk about.
Yeah, I think, for a long time I would always say, go buy, but sometimes, especially if it's a personal property, renting is, right now at least, the way to go.
Yeah. Okay, so now there are many condos that you can buy, and let's say you buy one and you want to rent it out. What you have to keep in mind is if you buy a condo and you rent it out, again, you're going to be getting rent of $2,500 every single month, but your carrying costs are going to be roughly $3,500, maybe even a little lower, $3,300. So that's about $1,000 to $800 that you're putting in every single month.
Negative cash flow.
Now, this is not something that we suggest, but if it's something that you want to do, then feel free to do it. We've done numerous videos talking on Airbnb, talking about the types of investments that you can do with that, the type of cash flow that you can bring in with that. And on average, throughout the year, there's going to be some really high months, there's going to be some really low months, but on average, you're going to be bringing in, after everything is paid, roughly about $1,000 extra. So say your number is $3,500, you're going to be bringing in about $4,500 every single month. So that, to me, is a good investment. So you can rent for $2,500 and you can buy something for, yes, you have to pay $3,500 every month, but it's bringing in $4,500. So $35 of that goes towards paying the bills. $1,000 of that, you can put that towards your rent. Now your rent is actually $1,500.
Yeah. So over, I would say, the last, let's say, 10 years of Toronto real estate, a lot of investors, quote unquote investors, were buying units and renting it out with negative cash flow. Mm-hmm. Why were they able to do that? Is because, some years it was going up 10, 20%. They're like, okay, I'm okay losing $1,000 a month, $12,000 a year, but my property is going to go up $60K. The numbers kind of made sense.
The appreciation.
The appreciation of the property was so substantial that it was okay to eat just the cost of doing business. Mm-hmm. But right now, and I think, going forward a few years, maybe 5 years at least, that's still the case. So it doesn't make sense to hold it for a negative $1,000 just so, you could live in it. In that case, you rent, and that's what we're saying. You buy a property like an Airbnb, and when Blanca says $1,000, that's $1,000 cash flow, meaning at the end of the month, you deduct everything. all your Airbnb fees, your mortgage, and your holding costs, and you get to keep that $1,000 in your pocket. And you know, we're talking about $2,500 in renting. If you live at home or your rental situation is even better, great.
Yeah.
Now you're really going to be able to do this, right? Like,
Yeah.
have the $1,000, and that can count towards, I guess,
Yeah.
a future investment.
Yeah. So I have a property management company, and one of our clients, actually a couple of our clients, they live in the place sometimes. Sometimes they live at their parents' house. Sometimes they live there, and sometimes they just rent it out on Airbnb as well. So there's other things that you can do as well. But again, it's not gonna make you the most money, but it might suit your lifestyle more than something else, and maybe you don't want to rent it out the whole entire time.
Yeah, that's the advantage of the flexibility of Airbnb, right? You know, if you're like, hey, you know what? Winter months, I want to live alone, not with the parents, not with the girlfriend, not with the wife, whatever it may be, you know? You do that, but in the summertime especially, right? If you're able to, you know, naturally, I think in everything in life, you really want to make some money, you have to sacrifice somewhere. So if you're able to rent it out for the summer months, you know, for the 6 months, right? The 6 months of late spring, summer, and early fall, you could easily make, you know, on average, again, 1,000. Some months will be a lot more than 1,000, right?
Yeah. And when we do talk about Airbnbs, like right now, we have a client who just bought for 500,000, was able to do some creative financing, and all in 36,000 was what they needed to pay to be able to own the property.
So
Now-
the 36,000 includes down payment, land transfer tax, lawyer fees, everything. Like
Closing, all the
to
closing
get the
costs,
keys,
everything.
basically.
Yeah, this is everything
Yeah.
to buy a property and to get the keys and own this property.
Yeah.
Now you also have to furnish it as well. This is for a whole nother
different
a whole
video.
nother
Yeah,
video.
for sure.
Yeah. If you want to know more about Airbnbs, we do have other videos about Airbnbs, so you can check out that, or you can click on the link down below, set up a discovery call, and then we're going to be able to dive way deeper into it with you. But what we want to move on now to is if you get farther outside of the GTA and you start getting into a duplex or a triplex. So we have clients who have bought triplex in London for 620K, a nice duplex in London for 600,000, and that's fully vacant. You're able to bring in about 400,000 every month, and because that doesn't have a maintenance fee, sorry, not 400,000,
Yeah, 4,000. Yeah, 400,000 will be nice. Sign me up.
Because that doesn't have a maintenance fee, instead of having to pay 3,500 a month, you only have to pay 3,000 a month. So now that makes it about $1,000 you're bringing in as well. Now the issue with this, it's going to be a market that's farther away.
Of course.
You don't know it. Maybe you have to get a property manager, but it's very far from you. One of the things we always say, it's best to buy in your own backyard, something that's closer to you, something that you can see, that you can touch. I mean, there's properties in Mexico, in Dubai, in Dominican Republic. You can get these at a great price, and they're going to cash flow as well. But again, it's very far from you, and if you're new to investing, it's always best to start with something that's closer to you, something that's in your backyard.
Yeah. Or alternatively, be okay with the commutes, right?
Yeah.
Like if you're like, hey, you know what? It's an hour. I don't mind. I love driving.
Yeah.
Perfect. Might work out for you.
Yeah, no, we have
You know?
we have some
plans like that,
investors,
right? So
some investors, maybe they're getting something in Oshawa, maybe in Grimsby, in Welland, in Hamilton
too.
Yeah, so yeah, if you're okay with it, then this is also a very good option for you as well. But with more doors can come more headache. But again, if you're the person who's okay with driving, maybe you're also okay with more headache.
Exactly. And the advantage of, we're talking about cash flow and being an investor first, right? The advantage is when you have this cash flow, let's say you have it for a year, you have it for 2 years. Now you go to the bank and you say, you know what? Basically, I'm running a business here. I'm cash flowing. So you have your income, and then you have proof over 2 years, 3 years, whatever the timeline is, that you're cash flowing. And now you'll be not only be able to get a larger mortgage the next time, right? You can even look at refinancing this property and then using those funds towards maybe a home. Maybe your situation changed. Now you want to actually buy a condo or a house or whatever it may be to live in. So you're able to use funds from this initial investment to do that, versus the other way around, right? Let's talk about the other way around. You bought a home, you're paying $3,500 a month. It's gonna, with life costs, it's gonna, if you have to eat, you have to go to the gym, you have to commute to work, back and forth. It becomes so much harder to now put yourself forward and start saving money towards your investment.
That's where the term house poor comes from.
Exactly.
We don't want you to be house poor.
Exactly. So, that's why we really focus on, even we've done it, you've done it yourself, I've done it myself, and a lot of our clients are just, we're telling them, if you need a home to live in, meaning, knock on wood, fingers crossed, you have a roof over your head, keep that situation as is.
Yeah.
Right?
Yeah.
Don't, everybody lifestyle creep, right?
Yeah.
You make a little bit more money, you get a bonus, you get a raise, and you're like, all right, first thing I'm going to do is upgrade.
Yeah.
Instead of doing that, go out, focus on getting this investment that will kind of fund your lifestyle. And we're only talking about one.
Mm-hmm.
Imagine you had, that $1,000 cash flow over 5.
Yeah. That
could replace your monthly income very easily. And now you have the 5K cash flow. Go ahead. Buy your $1 million house.
Yeah.
And that pays for this. That's the whole idea.
Yeah, no.
We're getting super deep into it, but that's the whole idea.
Yeah, and no, I never talked about kind of my first property, but yeah, I'm very, very investor focused. I would rather have a place that can appreciate but also bring me cash flow than live somewhere where I have to put more money into, because almost always you can rent something, you can rent exactly what you want at a much lower price, and you can get investment properties that are making you more money. So the first one was 2015, and that was a duplex in Oshawa. Now I have 2 Airbnbs and a pre-con on the way, but none of these are for me to really be living in.
Yeah. I really doubt you're gonna go and live in a 600 square feet condo at this point in your life, right?
Yeah. Most likely not.
But as an investment, right?
As an investment, it's a great investment, especially the way that the market is right now. We have another video that's going to be coming out as well, talking about how right now you can buy at 2018 prices. And we've been talking about 600,000, but we have properties that are 500,000, and they used to be selling for 650,000.
Yeah.
So there is money to be made over time, and we do have a shortage of housing, and we don't have new housing that's going to be coming. But again, if you want to go deeper onto this is not for this video. Click the link below, set up a discovery call, and we're happy to talk to you, sit down with you, and really help you understand the market, where it is right now, where it's going, where things have been in the past. But what are your final pieces of advice for someone who's thinking about buying, but they don't know if they should buy for themselves to live in or to have it as a rental property?
Yeah, I say, personal opinion, of course everybody's situation is unique, but you really need to think about, how can I use this asset to make me money? By having an asset that makes you money, right? And you be patient. Maybe it takes a year, maybe it takes 3 years, depending on your situation. You have one asset that makes you money, then you could take that money take that asset that's making you money and use it to buy another maybe asset that makes you money, right? You keep rolling it until you're like, what, maybe you're starting a family, right? Maybe a little different situation, but if you have enough assets to now cover your lifestyle, it'll help immensely, so that you're never going to be, house poor or lifestyle poor. You'd have this, every month. All right, I've been doing this for 3 years now. As an example, I'm cash flowing every $1,000 a month. You can consider it as income, right? And it'll help you. Maybe you love to vacation. Cool, it'll help fund your vacation. If you want a big house or condo, whatever, it'll help your fund whatever the next thing is for you. So I always say, we've both done it. We're helping a lot of people do it these days. Is be investor focused, run the numbers, don't be afraid. That's why you need to have professionals, right?
Yes.
Talk to us.
Yes.
Right? Your aunt's gonna tell you something, your uncle's gonna tell you something, your brother, your cousin, your friend, your coworker, they're all gonna tell you very different things. And if they haven't maybe done it themselves, they're not even open to the idea. So just come with an open mind, we will want to hear what you have to say, and then hear what we have to say, and I think we can head you down the right direction.
Yeah, no, I really like what you said about getting information from the right sources.
Of course.
Everybody, yeah, your aunt, your uncle, they're always going to want to tell you things, but it's off of their knowledge. And what has been taught from the beginning, and this was something that was kind of used to sell houses just in the beginning, is you buy a house, after 25 years, you're going to own that house and you're going to have zero mortgage on it. And maybe that house will be worth 300,000. Now they're worth over $1 million.
Yeah.
But this was the blueprint. This was the game plan, and it worked for a lot of people. If you find anybody who's owned a home or been a homeowner for over 20 years, this has worked for them, and it has worked great for them, and they've made a lot of money and they've built a lot of equity over time. But things have changed. Homes are now cost a lot more. Renting, and people are moving a lot more, and people are more okay with a shared economy. So as a new buyer, just make sure to educate yourself, watch more of our videos, reach out to other agents if you want as well, and talk to people who have investment properties, just to get a better understanding of what it's like. And there is risk involved.
Of course.
We're not here saying there's no risk involved. There is risk involved, but people are always worried, oh, someone's going to put a hole in the wall. Guess what? It costs like $300 to fix a hole in the wall. It's not like, if your Airbnb being your place, you can make $300 in one night. It's not that big of a deal, and people respect your home more than you think when you go out there and you vet people right, and you get the right tenants. But again, it all comes down to who you're listening to and who you're working with. Again, I'm Bawanka with the Compass team,
and it's Safraz with the Compass team,
and we're looking forward to seeing you guys on the next one.